Hi everyone, this is Prashad Parthiban. Today I'm going to talk about ocean marine insurance. Basically, ocean marine insurance covers transportation of goods from one location to another location across the ocean. So let's see some examples. As we all know, the primary thing that we do in terms of transportation of goods is cargoes. When I say cargo, the actual goods. In those scenarios, we need cargo insurance. Say if you are transporting like electronic devices or anything of the sort, machines across the ocean using the ship, then you need cargo insurance, which covers only the cargo loss exposures. Something happens to those goods, then you can use this insurance. Basically, this insurance is purchased by the cargo owners. When I say goods owners, not the ship owners. And there are two major categories. One is called as voyage policy. The other one is open cargo policy. When I say voyage policy, it works in such a way that, say you are transporting goods worth $10,000 as a one-time activity, then you can go with voyage policy. Say if you are a company which is of huge size and you transport goods on a regular basis, then you can go with open cargo, which means it's a long-term policy, and then you pay your premium based on your overall goods, not just for the particular voyage or the particular one-time transport. Hull insurance, which is nothing but vessel insurance, like the ship insurance. So if you are a ship owner who is responsible to transport those cargoes, then you need a separate hull insurance to cover your ship or any machinery or fuel inside the ship. So that's what we call it as hull insurance. Again, hull insurance has a clause to include collision coverage, which means say you as a ship owner, if you collided with somebody else's ship, then you are under liability. To cover these exposures, you need that collision liability exposure under hull policy. Freight insurance, as typical to property insurance. Say if you are a ship owner, during your journey something happens to your cargo due to valid cause of loss, then you lose your business income, right? Basically you are not going to get the money for that particular voyage. So then you can use freight insurance, which is nothing but business income. If your income is lost due to a kind of covered cause of loss or a claim, then you can use this freight insurance for claiming your amount back. Fourth one is protection and indemnity insurance. Say if you are a vessel owner or ship owner, and you have your employees who are operating the ship or passengers who are there in the ship, if something happens to them, or you collided your vessel or ship with a different vessel or ship, and there are passengers who got hurt in the other ships, then you can use protection and indemnity insurance. Not only for the passengers, like say if you are having a ship and if you collided in a bridge, then you can use this protection and indemnity insurance. Plus, if you collided another ship and cargoes which are there in that ship got damaged or lost, then you can use protection and indemnity. So quick recap, we have primarily four major categories. Cargo, which covers the actual goods that you are transporting, and again it has voyage and open cargo. Voyage is for that particular trip, whereas open cargo is for a long-term policy that you can use for all your trips. The second type is hull insurance, which covers your actual ship or the vessel, which, when I say vessel, not just the outer part, including the machines and the fuel, etc., which is associated with that ship. The third one is the freight insurance, which is nothing but the business income insurance, which is going to play an important role if you lost your income due to this claim. The fourth major one is protection and indemnity insurance, which covers any losses to the crew members or passengers or any kind of bridges on the way during your transportation. I hope you like my training videos. If you like my training videos, please do subscribe to my YouTube channel. Have a great day. Bye bye.